Hello everyone and welcome to the Fintelligent Investor channel. I am CA Pratiksha Pai. Today we are going to be discussing a certain very recent development that we are getting to know, which is whether the SGB scheme, that is the sovereign gold bond scheme, which is one of the most popular schemes by our government, is this scheme going to be discontinued? See, people are waiting eagerly for a new tranche of SGB to be announced, and people are also investing heavily in the sovereign gold bond scheme. However, now there are reports suggesting that this scheme may be either cut down or completely discontinued. So, what is the scheme? Why was it introduced? What is the issue now? And why are the reports suggesting that this scheme may be discontinued? Let's try to understand all this. Let's dive in. Before we start, let me give out some shout outs based on our previous video. Those who had commented on our previous video. The shout outs go to Ravindranath, Ran Chetty, Shraddha Tendulkar Sinkar, Geeta Sundaram, Anukul Thapa, Kausalya Gaundar, Nagaraju Bandi. So thank you for your comments on my previous video. And now let's dive into this video. Before discussing on the reports of whether this scheme will be shut down or no, first let us try to understand what is the SGB scheme, and this knowledge becomes very important from the point of the view of the discussion that we are going to have today. So basically, sovereign gold bond scheme was introduced and launched in the year 2015, and here it allows the resident individuals, HUFs, trusts, universities and charitable institutions to basically invest in gold in a digital format. So whatever your investment is, you get a bond denominated in grams of gold. Here the minimum investment is 1 gram of gold, which is that you cannot invest say 1 rupee or 100 rupee. Minimum whatever you have to invest is in terms of 1 gram of gold or in multiples thereof, subject to certain higher limits. Once you invest in SGB, it has a lock-in period of 8 years. However, there are exit options after the 5th year. Now, every year you get an interest of 2.5% per annum, but paid biannually. Now, why was there an interest portion payable? Of course, to promote the SGB vis-a-vis holding of a physical gold. Now, when finally the bond gets redeemed, it is as per the gold price of that particular day of redemption. So, say when you invested, if the gold price was, for example, 3,000 rupees, and say you invested 6,000 rupees. Your investment is not termed as 6,000 rupees, but it is termed as 2 grams of gold. And when you are redeeming the same, what is happening is that if today the price is 7,000, then you get back the amount in relation to 2 grams of gold, that is 14,000. Okay, so the redemption price is also linked to the prevailing market price of gold on the date of maturity. Now this sovereign gold bond units which you invest can be pledged and can be traded on stock exchanges as well. So the liquidity was there if you are looking to trade on stock exchanges, plus it was a good pledgeable asset. Now again, apart from all of this, that is you get interest and it's all in a digital format. Apart from all this scheme is government backed. So this is why this scheme is one of the most sought after scheme of the government, which is the sovereign gold bond scheme. Now that we have this idea about what is this scheme, now let us see why was this scheme introduced in the first place. See, India is the second largest consumer of gold after China. So there was a huge lot of import of gold that was happening. And what happens when we import? That means that dollars are going out. So what the government wanted to do was the government wanted to curb these imports. So what did the government say? That if you are purchasing gold only for the sake of investment, which means if you are not purchasing any jewelry as such, if you are purchasing gold just as an investment option, then let us try to curb the import by giving you online gold or digital gold or paper gold, and you don't have to actually hold the physical gold in metal format, but you just invest in our SGBs, wherein we will whatever is your investment will be denominated in terms of gold, and you will be holding digital gold, and you don't have to take the physical delivery of gold. And on maturity, that point in time, you can look at, if you can, you'll get back your money, you can use it in whatever terms you want. So this is the whole reason, to curb the imports. Basically, the government said that where you are investing in gold just as an investment option, let us not take physical gold, but let us hold digital gold. Also, of course, there were many other benefits also linked, which we discussed, wherein you get interest for the period of holding. There is no storage cost, no risk of theft. It is government backed, so no risk of default, etc. So this is the whole reason why SGB was as such introduced. But despite there being SGB, people were investing in SGB also, but the import of gold also did not reduce. So then here people are on one side investing in SGB also and importing gold also. Then what was the issue that arose? Let's see. Now the issue that started to happen is that the government started facing a huge interest outflow while paying interest to the SGB unit holders. Now see, when we talk about any investment avenue, it is either high risk, high return, or low risk, low return. Whereas SGB started becoming low risk, high return, plus no storage cost, no risk of theft, no risk of default. So people started investing heavily. And please try to understand, this is very important now. When the government is issuing sovereign gold bonds, do you think the government is actually holding that much gold with it? No, the government is just issuing a bond. But in the 8 years, the government has to every year pay 2.5% interest, plus at the time of maturity, the gold has, going by the recent experience of redemptions of sovereign gold bond, at the time of maturity, the capital appreciation is almost more than double. So the government is not holding actual gold, but the government is ending up paying more than double just within 8 years. So what started happening was that the government was paying interest of 2.5% plus on an average a per annum capital appreciation of around 10 to 11%. 10 to 11% plus 2.5%. So every year the government ended up paying 13 to 15% out, to the unit holders. And even if you see government bonds, it is 7 to 8%. Even avenues, low risk avenues like fixed deposits give you around, after tax, somewhere around 5 to 6%. But here, for a low risk avenue, the government was effectively paying out 13 to 15% every year, inclusive of the capital appreciation for that year plus the interest for that year. To give you an example, now on August 5th, one of the SGBs redeemed. This particular tranche in August 2016, it was issued at a price of rupees 3,119 per gram of gold. And when it got redeemed at 6,938 rupees per gram of gold. So what has happened effectively for 8 years, every year, if you calculate, it means that every year the government has paid around 9 to 11% of capital appreciation plus 2.5% of interest, which means for every year for this tranche, the government has paid around 13 to 15% as an outflow of interest plus capital appreciation to the investors. Now, when you consider a return of 13 to 15%, even mutual funds will end up giving 12 to 14%, and that too with a high risk. So this avenue started becoming low risk, high return, and the government started facing a huge amount of loss because of this scheme particularly, because, and of course the public was gaining. Now the government can't afford to go on pumping money like this at the rate of 13 to 14% to every to unit holders year on year. So that is why there have been reports that the sovereign gold bond scheme might either be cut down or it might be discontinued altogether. The government has reduced its target for issuing gold bonds in the FY 24-25 by 38%. So first step, it has cut it down from 29,638 crores to 18,500 crores in the interim budget. However, from February this year till date, no new tranche has been announced as such. So this could be the end of sovereign gold bond scheme, most probably. We have to just wait and watch for that to see how it pans out. So if you have watched the video till here, please comment SGB in the comments. And thank you for watching. Please like this video. Please share our channel with your friends and your family. We will come back with many more such interesting videos. Till then, take care. Goodbye.